Welcome back, guys. Did you guys take any trade other than AUD GPY this week? Not gold, of course, because gold we took together and it hit the SL. It's still moving in our direction, but I'm not interested. Right. Great. So, in this session, we'll talk about take profits and we'll also talk about a few things about psychology, mainly trade psychology and the problems you guys face, so that this closes the bootcamp main sessions on a good note where I'm able to solve your problems. And whatever challenges you face after that, you have to post it on the Telegram. I'll send you the link of a sheet where you can put your questions. We'll have one call in the week where we'll talk about all the problems, all the challenges you're facing, anything like you're not able to get support resistance or not able to analyze. We'll try to cover all of that. We'll have one session a week until you are perfecting everything. So let's start with the note on psychology. So I see that a lot of you face different problems. Like you come from a different situation where maybe you have kids and you have financial problems, or there's some burden, you're not able to look into the market that well, right? But the thing is, you can't bring your situation to the market at all. The reason is very clear. The market doesn't know about your situation. It's not going to help you solve your problems. Market is not going to do anything to you. But if you bring your situation to the market, it's going to affect in different ways, because if you have a financial burden, you are looking for a quick money and you want to make money. Like in a month, you have a target set that in a month I'll make around $4,000 or maybe $500, whatever your goal is. But when you start keeping that goal, you take trades based on that, that I need to finish my goal. I need to close my positions based on that. But trading doesn't work that way. It's never going to assure you that you are going to lock a 6% profit every month, or maybe 10% profit, or even 1% profit every month. Some months you'll face a loss, some months you'll have profits. It's part of the game, right? But expecting that you will for sure make that much money is not going to happen at all. If you are bringing that expectations, then very soon you will see a lot of your accounts getting breached very soon. And that will happen a lot to you guys until you understand this, that you can't bring your situation to the market. You can't bring it at all. You have functions or whatever things you have at home, some pressure at home, it's not going to help at all. So make sure when you're starting, when you're trading, you don't bring that stuff to the market and you spend as much as time you can with the market. I know you might not have that much time, but that is just one reason for you. Everyone has their own reasons, right? And if you have those reasons, you have to work on it. You have to find a solution for yourself, because there's no other way, there's no shortcut here. There's nothing you can do in this until you spend enough time with the market. You have to spend time, if not months, it can take years to actually become profitable. It can take years by yourself to become profitable. It requires a lot of patience, a lot of support from the people around. If you're not getting that support, it's going to be difficult. But then don't expect to give something back in return. Just focus on what you need to do right now. Spend all the time you have, all the time you can manage with the market. Look at price action. Try to predict every small movement you can, not on 15-minute time frame, of course, but try to predict the price action that can happen. For example, on a UDJPY, in the last session, the market was doing this. And I told you guys the market can easily create a structure which comes down. And it was a very easy thing. I had my 200 EMA on. I checked where the price can easily flip. I saw that 30-minute 200 EMA does well on retracement because it has been retracing from here. So you have to see different things with the market. You have to understand 200 EMA we have never worked with in the boot camp, but you can see it right here. The price has been moving through the 30-minute 200 EMA a lot of times. Right here, there's a touch. This one didn't, of course. Then all the way, the price pulled back to this area and then moved up. This touch was also similar to 2 hour EMA. On the 2 hour EMA, a similar thing happened. But you can see there's one touch here and then there's second touch here. On 30-minute EMA, it was much clearer, right? So you have to find relations in the chart. And to do this, you have to spend time with the market. You have to make sure you take your time and watch these sessions, look at the charts, spend as much as time with the charts. If you're not able to watch the sessions, I want you guys to keep looking at the chart, see what kind of price action it is doing, what kind of retracement it is doing, from what EMA it is doing. There's always a story. There's always a story behind every price action. Sometimes it's fundamentals, and a lot of movements are based on technicals. Let's see, if you look at the 2 hour EMA, why else would you see the price movement retracing from here? It was because of the 2 hour EMA. The support was sitting right at this place. On the 30-minute 200 EMA, it's very clear the price closed up above this EMA and then started moving up. So these stories you need to be clear of so that you are able to predict the next price actions. You are able to predict your stop loss trailing system. Initially, it will be a mess, but you have to perfect that. You have to spend time and you have to perfect everything you're doing right now. There's something to learn every single day. All right, now let's start with take profits. So, in a trend, it's very simple. You have been looking at this, how we have scaled. Initially, our original target was just 1 is to 3. We have hit, in fact, 1 is to 4.5 so far. And now it has done some retracement, and I'm looking back into next week now. The next target was 1 is to 6, but as I'm sure that it's going to take like Tuesday or Wednesday for the price to come up till here. So I've increased my target, and you can see this one says that at 2 p.m. UAE time, the price will come around this area after 2 p.m. mostly on the 2 p.m. candle. So if 2 p.m. it doesn't do that Wednesday, I'll still increase my target. Right now, I'm targeting 1 is to 7 now. No more 1 is to 6.2, whatever it was. I'm doing 1 is to 7 now. And this trade has been going for very long now. Last week, Wednesday, we entered this and still moving. The price can still come down to this level and then start going up again. That will eventually increase our target again, or it can just move to the stop loss. Anything can happen. Now, you can see the take profit is very simple. The way candles are moving, I am seeing the trend line. I can see there's clear touches based on 4 hour time frame on this line. So I'm not expecting anything else. I'm expecting a clear touch, and I'm gonna close below that touch. Not exactly on this line, a little below on that touch, covering the spreads. Because a lot of times what happens is, let's say right here, if you see this one, the market opened on Monday and the price went up. But on a lot of maybe prop firm accounts and broker account, this trade wouldn't have closed if someone was trying to lock a profit here. And the reason is very clear, the spreads. The spreads are so high that the price has to, in fact, move around this area to close your target at this point. At this point, if it has to close that. So, when you're thinking about take profits, you also need to think about spreads. What kind of spreads you have in the market? If you have some spreads, don't try to do things to the pip. Keep some margin for yourself, because at any point when news comes in or whatever comes in, there will be a wick hitting your TP, and then it will retrace all the way down, and you might see that your trade stopped out. You're still in the trade and your profit didn't get locked. So you have to make sure you work with the spreads. Yasir, yes, we can enter if price retraces again to this level. The odds are less, because what I see here is until the price touches up, there's no clear action. This price action comes once, and then you can see some kind of retracement, of course. But without price action, without structure, I can't take an entry. And the reason is very simple. Where would I put my stop loss? If I can't put my stop loss, I can't take my entry. You might think this would be a right point below this to put a stop loss, but the story here is different. And in a lot of places, if you have been trading for a long time, you will see this is not 100% sure thing. In Euro JPY, price moved down below the trend line, and then we might think that it's doing a bearish action. After that, there's something different happening. The price has in fact entered inside the trend line, doing some retest, and then moving up again, right? So you can't really just rely on the trend line. There's a lot of times where market will do something different, and that can affect you. So rather wait for structures, wait for clear structures, clear candle closes. Only then look for entries. Also, there's one thing I missed in the entry session where I talked about where your 4 hour time frame should be bullish and then you enter. There's one more thing. Your 1 hour time frame, you have to wait for 1 hour time frame as well to become bullish. If you're entering on 1 hour time frame, if you are entering on 1 hour time frame, and majority of the times, even if you are entering based on 4 hour time frame, you have to check whether 1 hour time frame is bullish because there's a higher low right here. This is the higher high, and then this is higher low. This is higher high, higher low, higher high. Price became bearish at this point. It continued down. It created more structures like this. So from this point, this is the lower low. This is the lower high. Price eventually turned bullish at this point right here, but that was not a very clear structure. If you see this, if this is the lower high, price slightly closed above this level. So price became bullish, but this was a much better clear structure that price became bullish. So 1 hour time frame turned bullish, and you have to look for that bullish change even on 1 hour time frame, not just 4 hour time frame. 4 hour time frame right here confirms us a different story, but the smallest time frame through which we enter is 1 hour, right? And if 1 hour is bearish, it can continue going bearish because 1 hour is not just a small time frame, it's also a very strong time frame through which you see reversals. A lot of reversals, a lot of continuations are first seen on 1 hour time frame. Of course, it can be seen on 15-minute as well, but again, that is a lot of noise. 15-minute turns bullish, bearish every few hours. From here, if you see this price action, you will see 15-minute turning bearish a lot of times on this. But on 1 hour, you won't see something similar. You will see a clear structure, in fact. Right here, you can see the 1 hour higher low is around here. This is the higher high, and then higher low, higher high. It turned bearish, but again, it started continuing. But if I go down to 15-minute time frame, there's so much bearish actions. Right here, you can see there's bearish price action. From here, it continued, and then this moved up. Right here, there's bearish. It became bearish again. This one is lower high. This one is lower low. It became bullish. So I hope you're getting the gist. It's a very noisy time frame. Never look 15-minute or 30-minute for entry until you have gained experience, months of experience where you're profitable. Don't try to refine it. I myself never try to refine this. I rarely use 30-minute time frame for entry. Now, let's talk about different types of take profits. So trend, you are very clear. If there's question on trend lines, how to put your take profits. If you have question on spreads, feel free to ask. So the question is, why did you use 200 EMA here? So In some sessions, I've told you I do use 200 EMA, but that's very rare. And that's only to confirm price action. That's only to confirm price action. I have, in fact, trading strategies over 50 and 200 as well. And that is available on my YouTube. If you check the videos, I have a lot of content available, and you'll definitely find an EMA trading strategy with 50 and 200. So there are a lot of different strategies. 50 and 200 I rarely use. I more of rely on support and resistance. I only use it for that now, but there is a trading strategy based on 50 and 200. All right. Any questions on spreads? Okay. Let's do Euro USD now. Okay. So spreads is basically a difference between the original price, where you have a ask price and then a bid price and then a sell price, right? So the difference between that, the original price, is spreads. And this happens when you're seeing price moving around this area, and this generally happens around news where there are not many orders available. So what happens is, when there are not enough orders available, price tries to liquidate the nearby positions. So let's say if the price is on the top and there's a huge order on the top, but at some distance. So what will price do is it will try to take that through the spreads, right? Through the spreads, and then price moves up. So eventually, the logic behind price moving is just that if there are buyers available, right? If there are buyers available in the market, what happens first is buyers come in here. Let's say they want to buy from 135 and they want to buy at 200, right? When the price reaches at 200. So the price to come at 200, someone has to sell at 200, right? There needs to be some sellers. If those don't match, there's no sellers available for the right price, there's no buyers available, that's where spreads comes in. Spreads try to move up both the sides and try to close orders with different spreads. Now what happens most of the time is, when there are high spreads, very high spreads, if you open up your MT5 in the settings, there is, I'll send this on the Telegram, there's a way to see the ask line. In the numbers, it's mostly not visible. You see there's some kind of spreads on MT5, but there's a way to clearly see it in the graph. There's an extra line that gets added, and you can then clearly see it that the price has some kind of spreads. If you see it on 1 minute time frame, it might seem large, but there are some spreads available. And through that spreads, you have to make sure that when you're setting take profit, and if it's based on completely on the pip, where price can, let's say, on Monday, price opens up and moves up directly at that point when the session just starts in the first hour. In the first hour, the spreads are huge, and that's why a lot of times in the Telegram group, I always say manage your trade. By managing trade, what I mean is, let's say the price is around here, right? The price is around here and the session is going to switch. So what I do is I just remove my stop loss, because there can be huge wicks because of spreads, because of market conditions. There will be huge wicks and it can easily take me out, very easily take me out. But with this, you also have to understand, if your price is just here, rather than removing your stop loss, you should close it. Because let's say price opens up and it moves, starts moving down, there's not enough distance, the price can just close below your stop loss and you will end up losing more money than what you have risked. It's a very simple case. So the only thing is, you will learn this with experience when you have faced those problems. I have faced all of these problems with the market. So that's why I'm just trying to caution you. So spreads is mainly the distance between the real price and your orders. get affected with spreads. Let's say if there is a high spread and you try to buy, imagine the price is at 1.134. The spread is saying that the price is at 111.500, and you try to buy it right here. Your position will be placed at 111.500, not this price. That is how you get affected by spreads. The real price is moving somewhere else. So when you have high spreads, even though the price has touched this area and there's a high spread around this area, it won't liquidate you. I hope this is clear. There are a lot of things with spreads. There are a lot of challenges you face, but you will learn it with the market. With time, you will learn all of it. Now let's do USD CAD. Now, when you're setting targets, when your analysis is based on multi-time frame, right? When your analysis is based on multi-time frame and you're trying to set your take profit, you have to first look at different structures. For example, this one was a multi-time frame analysis. So based on multi-time frame, your trade TP can easily be around here, even though this did not get hit. And that's a very high chance, that's the probability of trading. But the TP is based on the recent low, not below this. If the fundamentals are very much with you, only then what you have to do is you have to just remove TP and then you start scaling the trade through stop loss. You trail your stop loss, try to lock profits through structures the way I've taught you. Through that, you move your stop loss and then you don't set your take profit. But the best way, the right way should always be to target this TP because there's some news coming every week. So for gold, I told you that you can scale, but for forex pairs, you should always keep a TP to the low of the time frame of your choosing, and it should be mostly based on daily time frame. Because if you try to do it on weekly time frame, let's say let's say you entered the market at this point, and if you try to put your TP right here based on the low of the weekly, you maybe got an entry right here on this candle. There's a candle here. So this is 1 week, 2 week, 3 week. So it can easily take 3 weeks to see that target happening. But daily time frame, that's not a wrong thing, but daily time frame will give you a clear idea of where your target should be. And if that happens really quick, it's better for you, right? Because weekly there's a lot of chances that it easily flips, it creates very long wicks. A lot of different price actions happen on weekly time frame. So use daily time frame instead to set your targets for multi-time frame analysis. Now, next, on support resistance is very clear. Let's say you're trying to sell from right here. You can clearly see there's support right here. That's your target. That's a very easy target. You can see the price moves up and it comes down. So that is your target. USD CAD. I didn't look at the market again. I'm just seeing this. So it in fact did what we wanted. All right. Yeah. So this is the liquidity level. Stop loss could have been easily here. Entry around here. Anyway, so we missed this trade. I just looked at the chart right now. I have not been looking at any entries during this week because AUD JPY is already doing a lot of consolidation and I don't want to take any other losses in the market except for what we got for gold. Anyway, so when looking at support resistance, if majority of the times you're trading with daily time frame, but if you're on the 4-hour time frame, you put your TP based on 4-hour time frame. If you're doing daily time frame, then it's based on daily time frame. Now when you enter based on daily time frame, you have to see this is the place from where you trade, this is your target. And if you're trading from here, first you have to see, is there any structures like this in history? Yeah. So you can see there's a reversal point from here. There's a second touch right here. So you could have easily target a TP around here. And you can see I've already taken a trade based on that. I have already taken a trade based on that. 1 is to 2 right here. This was in September. I could have easily targeted this TP or call this TP here, but you have to see the touches. You have to see there's one touch right here, there's two touch right here, three touch right here. So you have to play with the odds where there's a huge chance that price can reverse from below this area. So I don't exactly go to the pip. Instead, what I see is there is a liquidity area right here. There's touches right here around this area. Based on that, I've kept my TP, and the market closed me out there and it moved down. Even though the next candle, you can see the price, in fact, came down till here into my drawdown, which I wouldn't have liked at all. I would have rather put my break even here. So it would have, moved me out of the trade. So I'm glad this worked out. I hope you're getting this. When you're looking at daily time frame, you have to look at daily support, daily resistance level. When you're looking at 4-hour time frame, you have to look at 4-hour support and resistance levels. And how do you define this 4-hour support resistance levels are the ultimate thing for your trade based on the swing highs and swing lows. You can clearly see when I zoom out the price, I can clearly see the market doing a swing like this, right? Market is swinging like this. It's swinging like this. So this definitely is a support area. Even if I see it on daily time frame, it will say something similar to me. You can see there's a lot of touches. It's swinging from this area. So these are your swing lows, not this. This is not exactly your resistance line. Even though you see a lot of liquidity areas at this point, but this is not exactly your resistance line. You have to understand what is exactly a swing high. Based on that, you draw lines, and those lines should also more of show you not just resistance, also support. Both the stuff. Here we see there's support, but right around here, almost this price rejected from here. This one didn't, but there are more touches at this level. So that is showing you price resisting this area and then continuing down. Imagine if you're looking for a trade from right here where you look for a break of support and then retest and then enter. The price would have given you an entry like this where you close your profit around this place. So you have to look at support and resistance. Now, when you see a pair like gold, you're trading a pair like gold where it is making higher highs. Now, again, what you do, you don't put a specific TP, right? But that also means you don't actually go on and trade like I'm gonna enter at 4,900. I'm gonna enter on 4,900 and my TP will be around 5,500 because there's a resistance in your trade and that is $5,000. $5,000 is a psychological level which can easily affect your trade. So you shouldn't just go and trade based on that. If there's a trend line, then there's a pure logic there. But if there's no trend line at all, if there's no trend line at all, like gold moves directly up, for example, right here, the price has broken out. Where would you set your TP? The base target is 1 is to 3. Right here, it's 1.1 is to 2.82. But this was again the scaling thing I did. When was this? This was 9 Gen. You take your entry, you lock your targets, and when the price starts moving up, you have to see what kind of retracement price can do. And you have to move your stop loss accordingly. So right here, I was just targeting 1 is to 3. Price moved up nicely, and I wanted to lock at least around 1 is to 3. So that's why I put my stop loss right here, and that got hit. And that is completely okay, because now here at this point you really don't have any targets. You have no targets at all. You don't know where your TP should be, where at max the price can reach. For example, imagine if I would have been in this trade with just 5200, 5200 stop loss. If I'm closing around this level, I would have had around 1 is to 20, 1 is to 30, I don't know. Yeah, around almost 1 is to 18, right? But you never know how long the price is going to go. You don't know what the TP could be. Right here, you can see the price 5000 was a challenge right here. 5000 was a big challenge because the psychological level of 5000 carries a lot of emotions. So taking that target is not easy. So you don't know what's going to happen. Even 4500, 4600. I expected 5000 wouldn't be touched until mid of 2026, but price easily broke all of these levels. So at this point, what you do is you scale your stop loss. You scale your stop loss. You lock your profits through stop loss. I hope this is clear. AUD JPY price, we definitely don't see any history at all. Right here, if you see, there's no history at all. Somewhere I was reading price was around this level in 1993 or 94. I was just reading some news on this on AUD. But in whatever we see in the chart, there's no top. But because of this trend line, we can definitely mark the target. That doesn't happen on a lot of pairs which are constantly moving up. So make sure you learn how to trail your stop loss. Watch the session again. Don't give a reason to yourself. I don't care whether you are actually watching the session, because you are going to get affected. But whatever reasons you give to yourself, that I was busy here, I was doing this, I had a family thing, I had whatever you had, there's always going to be something that's going to stop you from becoming profitable. It had stopped me as well. The pressure, the financial pressure, whatever that is, you have to figure it out. You can't bring that stuff to the market. You can't bring that stuff to your learning. When you're learning, you have to dedicate yourself completely in the market, because this is the easiest thing you're going to do. And this is the most difficult way to become rich, to become financially free. The most difficult way, because it can just take away all the money from you. Trading is a very difficult job. It looks easy on the side where you're just taking entries, but doing a regular job is very easy. The reason is very simple. I had seen this in a podcast. This guy was saying very clearly that in any job you do, you get paid some salary, right? You get some salary from that job. So there's something coming every single month. But in the market, it's going to actually take the money away from you. If you're trying to make money from the market, first you have to put that money, and that money can easily be wiped out to zero. So it's not an easy job. It looks easy to the charge, but the psychological pressure is very different. So don't give yourself reasons to not becoming profitable. You can easily blame me, your mentors, maybe the market. You would just hop on to different strategies every single week, but that is not going to help. You will be just jumping strategies back and forth, trying to find a new strategy, a lot of stuff. But I have taught you everything. Everything is done through history. The only thing right here now is that you are actually working with your psychology. You're doing everything stress free. You're not bringing your burdens on the charts. You shouldn't be looking for a trade because you have to make some money this week. That specific thought is going to make you lose. You're here because you might make money. It's a very clear thing. You're here because you might make money. There's nothing definite here. And you can't set your targets on this week, this month, I'm going to make this much. Are there any questions on take profits or any other thing, psychological thing, pressures you want to discuss? Do it now, because this probably is the final session of this bootcamp. Today is the day you can just be clear. ask whatever problems you're facing, what you can do, any challenges you can solve with me. Are there any questions on take profit? Take profits is very easy. I told you guys it's going to be a very small session. But if you have any questions, feel free to ask. So the problem is I can't exit perfectly every time. Retracement happen, my psychology get affected, right? So for example, this trade itself, it's been going on since more than 10 days now. 7, 8, 9. Yeah, 9 days actually, 9, 10 days. I don't know exactly. Yeah. So you see there are different price actions happening, but you are in this trade with me. That's why you have this trade active. I hope so. This trade is active. And all of this is controlled just because you're listening to me. I haven't moved my stop loss, so that's why you haven't moved your stop loss. My stop loss is here, that's why you have your stop loss here. So everything you're doing is just you're trying to listen to me, and that's it. That's the exact step you're taking. And these steps can easily be found in your brain itself. You have to just think rationally, you have to think logically. Where should be your stop loss? Where should you exit? And between this, there shouldn't be anything else. What will happen at the end? What will happen if the price comes down to this level? What will happen? I will be breaking even, right? I'll see $800 going away. Right now in the challenge account, we are on at least 800 plus dollars. So $800 will be just wiped out in a moment, where price can easily come down and do that. But what will that do to my trading? It won't do a single thing. It's just I won't be making that money today. And until that take profit is locked, until that trade is closed, I don't have that money with me. That's very clear to me. And that should be very clear to you. Until that price hits your TP or your SL, you are still in the loss. Except that if you're risking $200, if you're risking $100, that means you have to accept that you're going to lose $100. Expect the worst always. Expect the worst always. So when price starts moving, now you have to accept, when you're putting your stop loss at this point, you have to accept that I'm going to make only $10 $12 from this trade. Else it has to hit this TP if you want to lock that profit. A lot of people actually face this problem where they see retracement. They see a retracement like this. I have been looking at this retracement, and this has been frustrating to me. I saw this price coming down and then moving up. I was live watching the 15-minute, 30-minute candle closed right on these levels, right here. And it was a little frustrating to me as well. But what can I do at this point? I can easily just lock myself out at this, close my trade and just get out of it. But again, that is going to just restrict my win rate. You have to understand this. You are in a long game of survival, right? In the long game of survival, it doesn't matter how much time it takes to hit your TP or what kind of structure is creating. If market is doing this, it has done this something like this in the history. It's not doing something which is unknown to you. You haven't seen in the market. If the market goes on to creating more structures like this, where it comes down to this level, or even if it comes down to this level, I'll be little in a shock because it broke the trend line. But that also happens, right? Price does breaks the trend. That's going to happen at some point in this trend itself. It's never going to go straight in this direction, touching the bottom, touching the top, then because then it will be very easy, right? So that can happen. What you can do at this point is just wait for the market to do its thing and try to not lock yourself out at wrong places. For example, I see a low right here, and then I see there's some low right here, there's support, price rejected this area, there's support right here. I can easily move my stop loss at this point. But if price starts moving down from right here, I can clearly see price coming down to this level. So would I want to be moving out of the trade just because price reached here? I might not get the same opportunity on the 4 hour time frame. It can just be a wick again and continue moving up. Then I'll be more frustrated. Then I'll try to get that entry with a different stop loss, all of that stuff, but it won't be as good as the original trade. I hope you're getting this point. I know I can't exactly just make you do something which you're facing, but I'm trying to make you understand that stop looking at the floating profits the way you look at it. Today itself, I have only looked at MT5 twice or thrice, maybe at max. Just opened it, checked, watched the swap, and then I was looking at what kind of money I have in the account once I opened it for the Instagram story. That's it. And majority of the time, what I'm doing is I'm just looking at these candles on TradingView. I'm not opening MT5. Don't open your MT5 account unless you want to do something specific with it. Open your TradingView, look at what candles are printing, make your decisions based on this price action, not at the amount it has made. The amount, the floating profit shouldn't matter. This candle should matter. If you don't have that pressure of how much money it has made, or what's the floating profit right now, what's the drawdown right now, you won't be pressured based on money. You would rather be pressured based on candles, what kind of retracement you're seeing. So once you take the order, unless you have to modify your order where your stop loss moves or something like that, or maybe you have to move your trade based on the daily drawdown limit by prop firms, only then open MT5. Else, don't open MT5. What if we take TP and take another trade after retracement? Did it really hit your TP you're saying at this point, or you're saying close the trade right here and wait for a retracement? All right, you can definitely do that, but the problem is you can close at 1 is to 3. It's completely fine. The main target was this right here, and that has happened. I am happy. It's completely a right decision. But you're expecting a retracement that can take time. That can take time. My goal is to actually lock as much as profit as I can. That's why I'm in this trade. Original target is already hit, 1 is to 3. But the price, let's say, it might not just come down again. It can easily start going up. Monday it opens and it can go up for the whole week. It might be up. And then the next week it might start moving down. And after that, next week it might start coming down again. So it might take 3, 4 weeks, and it's completely fine to do that. I am in this trade just because I want to lock higher risk to reward. My logic is that I want to see price touch. This should be my TP, and that's why I'm moving my TP along the line. I mean, I don't have that much of emotion left with the money. I mean, of course, I want money, but I don't feel it that way anymore. I used to feel the same way you're feeling right now, but I don't have same feelings. It's okay if it comes down and takes me out of the trade at break even. At max, I'm not gonna make money even though spending almost more than 2 weeks now in the trade, because next week this price might start moving again to the TP or to the trend line, bottom trend line. But what can I do in that? I can't show my frustration on the market. There will be more opportunities. Of course, financially, it's a different story. But with markets, the main goal for me is just to survive every week, just try to become profitable. That's it. That's my goal. My goal is to become profitable every week. That's it. All right. So I hope I have been clear. I know I might not be able to understand what situation you're in, but again, I always think it this way that I can either give reasons of not doing things the way I should have done it, or I can just do it the way it should be done. Throughout my life, after I passed my 10th, I have faced a lot of challenges, different challenges, a lot of struggle I have faced, and I know I can do things the right way. I can always find time. I can always come back. Whatever I am suffering from, I can come back. That's my thought. That's my motivation. And that's what I try to do every day. So I want you guys to do something similar. You might be facing problems I cannot understand, and a lot of people might not understand, but you have to keep that aside. You have to talk to yourself and find a feasible way. Talk to yourself is the best way to come up with a solution. When you talk to yourself, you have to try to bring all the options you have, and based on the best option you think, you should work that out, because nothing else is stopping you from becoming profitable. You think that I'm not trading it right, but majority of the times people are failing at trading is because of psychology. Trading is very easy. When you see the market opening up on the weekly candle, there's going to be a wick from the downside, and from the upside somewhere there's going to be a wick. There's It will be mostly reacting from some kind of support or resistance, and from that support and resistance you can look for an entry around that area, and at least 50% of the time it's going to go in your direction. And when it goes in your direction, you will be easily locking 1 is to 2, 1 is to 3 take profits. And from what I have taught you, you will be easily locking 1 is to 3, 1 is to 4, all that stuff. If you're not locking that much, don't take the trade at all. And when you're locking that much, you are becoming a profitable trader. But spend time with the market, try to build relations, check history. Don't need to backtest everything, just try to practice it out on the live chart. On the live chart, see what kind of price action. If you could have taken entry, what would have been the reasons around that area? Let's say if I just look at this candle and I see a low around here, if I wanted to take an entry from this place, from this area, why would I enter from this area? What exactly happened in this area that would make me enter this trade? Try to build relations, do all of that stuff. This is where you understand price action. This is where you understand relations with the EMA. This is also where you understand relations with support resistance. For example, if I just overview this in 1 minute, there's resistance right here. Price has been moving up. There's a break of this resistance. There's a retest on this level. And from the 4-hour EMA, there's a continuation. At this point, you could have entered this. There's so much confluences that the market gave you before it moved up from this level. So you have to look at this market, different price actions, different relations. You have to build that. When you build relations, you are going to get better. All right. Tomorrow, I'll see you guys in the analysis session. And from maybe Sunday or Monday, I'll send you the link of the sheet where whenever throughout the week you're facing any challenges, put it there on the sheet. Psychological or technical, whatever problems you're facing, put it there on the sheet. Try to put as much information you can along with it, maybe attach screenshots or whatever you can. Just do that. On every Wednesday or maybe Friday, we'll have one session where we talk about the problems you have been facing. Great. So I'll see you guys tomorrow. Bye bye.